I would argue the scrutiny only goes up, and now the onus on him is to act like a more regular CEO. He may hate it, but that's the reality. You want to play with the big dogs, you have to be a big dog.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. If you're still not sick of Tesla S&P 500 inclusion related content, it's your lucky day. We've got another video in store. This video, reacting to a few comments, especially from Cramer in the mainstream finance media, and a little bit of a lover's tiff on air as to whether or not Elon Musk is going to temper his behavior now that they're playing with the big boys. So let's get into this video. But first, hey guys, if you're in the US and you'd like 3 free stocks, yes, 1, 2, 3 free stocks, check out the link in the description to WeBull. Open a new account and fund it with $100 and you'll get 3 free stocks, 2 of them valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Moving on to Tesla. Those shares were up 13% this morning. At long last, perhaps for Tesla bulls, the company's going to be going into the S&P 500. That will happen before the open of trading on December 21st. If you look at how big Tesla is right now, it would be, if it entered today, this morning, the 10th largest stock in the S&P 500 by market cap, just after Johnson & Johnson, which is pretty incredible here. And guys, obviously there's been a lot of controversy around Tesla. Is it consistently profitable enough, especially if you look at the numbers on a GAAP basis? You know, is this a company that deserves to be in the S&P 500? Well, the committee answered the question. They're putting it in there. But I wonder what the trajectory is going to be like. Miles, you want to weigh in on this?
Look, I would just kind of take a line that Charlie O'Shea told us talking about the retailers. Doesn't relate to Tesla, but he said that, the Walmart story is so great right now that it's becoming boring. And you look at the last couple of quarters for Tesla, the numbers are kind of just regularly good, right? They're selling a few more cars than they expected. The cars are mostly being delivered on time. The company is turning a nice, modest profit. I understand there's a lot of passion, a lot of excitement around the stock. My favorite kind of bear comment from last night was, this was the final catalyst for Tesla. And I don't know if that was made in earnestness or if that was made in jest, but I do think that look, Elon Musk has said it himself. In 2018, when you looked at the stock, you said, boy, there's something wrong here. He said they were close to running out of cash, right? Their financial position was quite weak. Well, now the story is completely different. And I know Elon is very exciting and we talk about him all the time because he does very Elon-y things, but the Tesla operational story itself is somewhat straightforward. And Sazi, I think they have a lot of those secular tailwinds that they think they're riding, electrification, ESG, and so on. I think that's kind of all just in place.
All fantastic points here. To sum it up, as we already know, Tesla is winning.
Well, for now, Miles, there's no question this company, they really have turned the corner, but at some point, those EV tax credits that have boosted Tesla's bottom line here will wear off. I would also add this. Does S&P 500 inclusion mean that Elon Musk finally tones it down a little bit? Does this mean he's not out there tweeting about potential COVID-19 misinformation? It's unclear. There's a lot more responsibility.
Come on. That's
no,
like
listen, hold on. There's a lot of This is a lot more responsibility here for Elon Musk when you're an S&P 500 company.
I get the distinct impression that these are the comments of somebody who's projecting their own insecurities, their own interpretation of the world, and probably cares far more about what other people think about him than his own values and living a life true to them. Of course, I could be wrong, but being somebody who, like Elon, gives approximately zero fucks what other people might think about him. In fact, let's think of an analogy here. This guy smokes a lot of weed, very open about that. Shaves when I feel like it, can't be fucking bothered, wearing a baseball cap, not in a blue collared shirt, starts a channel talking about stocks, gives no fucks, channel grows, 50k subscribers. Do I take a step back and think, oh no, well, I'm starting to play with the big boys now, I better get a haircut, have a shave and get a new shirt. No, don't give a shit. 100k subs, still don't give a shit. 150k subs, still don't give a shit. Elon's the same kind of guy. He is who he is. Like it or leave it, it doesn't matter. Some people will be put off, some people are going to hate the guy. Just like my channel, oh my god, dude, you can't swear, oh my god, that's fucking disgusting, unsubscribe, haha. Still don't care. Kind of relate to Elon. Does he really think that being in the S&P 500 is now going to somehow change or temper Elon Musk's behavior? No. Might temper or change the behavior of somebody who's extremely insecure, but like I said, we're talking about Elon Musk here, not an anchor on Yahoo Finance. Just saying.
I would argue the scrutiny only goes up, and now the onus on him is to act like a more regular CEO. He may hate it, but that's the reality. You want to play with the big dogs, you have to be a big dog.
I don't. We're going to continue to debate this. I don't see it happening.
That is so fun to watch. And yeah, I'm on the same page there. I mean, come on, man. Are you fucking serious? Now, there might be another layer going on here. Could be crazy. It's around 4:20 p.m, so maybe I'm hallucinating. Please forgive me if that's the case. But I almost feel that there's a second dynamic going on here. Ask any woman who's self-aware, what is the characteristic they find most attractive about men? Generally speaking, not always, but generally speaking, again, a woman who is self-aware will suggest that confidence would be that number one trait. Okay? Confidence. What takes confidence? That's right. Having testicles and just being yourself. What will turn women off? A needy, pleasy little beta male who just wants to be exactly what he thinks that you want. Oh, yeah, I'll change my opinion for you, honey. Yeah, you like that? Okay, I like that too, huh? You don't like that? Yeah, I don't like that either. Now, I almost feel, could be wrong, but this female anchor here might find some of the traits about Elon Musk. Being himself, being a real human being, having that self-confidence to just own who he is, may find that a little bit attractive, and there's a second layer of repulsion over the very notion that a guy like Elon will temper his behavior. Again, I could be imagining this, but just throwing that out there.
In the meantime, we're watching Tesla, which is surging in the pre-market on news it will be added to the S&P 500 prior to the opening of trade on December 21. This is among the highest valued companies ever to enter the index, and its market cap of about $387 billion. That's based on the close. Makes it more valuable than 95% of the companies currently in the S&P. Jim, if you take current trading into account, of course, the market cap is a 4 handle.
I think they're baffled. I really don't think they know how to handle this. What do? How do you kick? You can't have the S&P 500 only have 497 companies. Although I've heard people on air sometimes say there are 500 companies in the S&P. Shocker. I don't know what they would do. I mean, they can't. What do they knock out? They can't knock out the smalls. It doesn't do anything. David, when they balance this, I think it is going to be, they almost seem to have to make everything smaller.
Right.
How about that?
I guess. But, well, we've talked about, though, the influence of these mega cap companies on the index itself.
Yeah.
For the longest time, I always drew the distinction between the Dow and the S&P, in part because one's a price-weighted index, one's market-weighted. But the fact is that Apple and Alphabet and Amazon and Microsoft, and then you get down a little bit, all right, Facebook and then Tesla, they have enormous impact on the movement of the index itself. It's only, 6-7 companies.
And that's why I think that you see a lot of these younger investors say, you know what, I'm going to pick the best of the best.
I think Jim Cramer's got a very strong point here. Let's test the theory. Let me know in the comments below. Do you A, only own individual stocks, B, own individual stocks and some ETFs, or C, only own ETFs? Now, I could be wrong, but I'm willing to guess that the vast majority of people watching this YouTube channel are more likely to be buying individual stocks than ETFs. Unless, of course, you've somehow accidentally stumbled across this channel via Reddit, which you actually use as your main source of information, in which case, the only way to reach financial independence, obviously, is to invest in the Vanguard index funds, obviously, because that's literally the only way you can possibly become financially independent, according to Reddit. Shout out to the basement-dwelling adult virgins.
This index doesn't necessarily represent what I want, which is a piece of America. It represents a piece of about 7 companies. And I think the younger people are not fooled. They are not indices. They do like ETFs, but they like to buy individual stocks that they think are going to be right.
I think Cramer's got a great point here. I mean, look at me. Like, the very thought of average returns repulses me.
And that's been their pattern. Carl, younger people are really into certain stocks. They love NEO, for instance. Wait, you just yawned at my analysis.
I was not on television, and it was something I couldn't help.
But you crushed me.
Everybody, he's looking at me even though he's talking, and I'm not on TV. And yes, I had a brief catching my breath.
My NEO analysis.
Jim. I was listening to NEO. Go ahead. Tell me about the young people in NEO. I want to hear about it.
I'll get back to you. No, the younger people, Carl, the younger people are transfixed. They love to buy Simon Properties when there's good news about retail sales. And anytime that anyone says, you know what, I might cruise, like Norwegian Cruise Lines, if they offer, and I think they're going to, a test from CVS, and everyone's got to be tested, test, and they come out and issue a release, they will buy Norwegian Cruise Lines. They are kings of the obvious. That's what they like. They like the obvious. Tesla goes up, well, let's buy Tesla. How about hydrogen? Let's buy hydrogen. Dude, it's like they are herd animals. They are herd animals. Hey, you know what? The Steelers are in first place. Let's buy the Steelers. That's the way they think. They do.
Jim, it's working for them.
It is working. That's my point. That's why my point is that the S&P 500 is old-fashioned to these people.
I'm just going to say it now. The S&P 500 at this point in time, if you're investing in that index, you're not very smart. Let me explain why. Half the companies in the S&P 500 have absolutely nothing to do with artificial intelligence or technology. Guess what that means? They're going to get disrupted by companies that do. That's right. Half of the S&P 500 index will be out of business in a decade or two because they were the old world. Bricks and mortar, retail, traditional, rail infrastructure, etc. They're going bust because they're not riding on the exponential waves of technology's progress. They're f***ed.
But it was a number of months back when we all thought, well, we're going to probably watch this new cohort drop off. But they haven't.
No, they're more involved than ever. And they're smart. And, Carl, they're fun. They love it. They love individual stocks. Even though we think that they only love indices, Carl, they love stocks. And I think it's fantastic.
I can't argue with Cramer there. I sure do love my individual stocks. I mean, wouldn't you? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you're in the US and you'd like 3 free stocks, check out the link in the description to WeBull. Open a new account and fund it with $100 and you'll get 3 free stocks, 2 of them valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.